Welcome to the Tyre and Industries Limited Q4FY22 earnings conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Prateek Vajani, ICICI Securities Limited. Thank you, and over to you, sir.
Thanks, Ligan. Good day, everyone, and thanks for joining us today for the call. From the management side, we are represented by Mr. Anshuman Singhania, Managing Director, Arun K. Bajoria, Director and President, Mr. Sanjeev Agarwal, CFO, and Mr. A.K. Kindra, Financial Advisor. Now I would like to hand over the call to the management for the initial remarks. Over to you, sir.
A very good morning to everyone and a very warm welcome to the JK Tyre's Q4 FY22 earning calls. And thank you for joining us today. I am Anshuman Singhania, the Managing Director. I have with me Mr. Arun K. Bajoria, Director, President, International Operations, Mr. A.K. Kindra, Financial Advisor, and Mr. Sanjeev Agarwal, CFO of the company. The year was remarkable in terms of achieving the highest ever turnover of more than 12,000 crores, registering a growth of over 31% vis-a-vis FY21 on a consolidated basis. This has been achieved on the strength of higher sales in the domestic market, coupled with the highest ever export of rupees 1873 crores, which was up by 60% on a year-on-year basis. Domestic market will remain our main focused market. In addition, we will continue to expand our footprints in the global markets to gain higher volumes with market-specific products like truck, bus, tires, passenger car tires, and OHT. Cavendish and JK Tornel have also contributed significantly to the highest ever revenues during the quarter on the back of good demand in their respective markets. We witnessed a strong domestic growth, especially of the product segments like truck, bus, radial, passenger car, radial, LCV radial, SCV radial tire categories. OEM demand has improved in the financial 2022 on account of revival in the commercial vehicle and passenger car segment, with a gradual pickup in the economic activities and post-unlocking of the COVID restrictions. However, semiconductor chip shortage and the supply chain constraints continue to impact OEM offtakes. Farm segment and 2-3-wheeler demand has lower due to muted rural demand. We have recently added business with Kia Motors for the model Kia trains in this quarter. On the outlook of tire industry, we believe there is a strong demand growth across all the market segments given the improved economic sentiments, record agri output coupled with improved realization in the country, which is expected to lead to robust rural demand this year. Further, with their expected moderation in the inflationary pressures and improved geopolitical sentiments, automotive as well as tire demand should improve further. Strong infrastructure spending by the government will continue to improve the CV segment demand in the coming years. Continued inflationary input cost pressures have resulted in compression of operating margins. However, we are increasing selling price progressively and have undertaken cost reduction and efficiency improvement measures to moderate the impact of increased input cost. We hope that the inflationary pressures would taper down post-resolution of the geopolitical tension and the supply chain constraints. We are very happy to announce that the board has approved the PCR capacity expansion project for an estimated cost of rupees 530 crores at the Banmore Tyre plant. The proposed expansion plan, along with debottlenecking program, which has recently been commissioned, will lead to an increase in the PCR capacity by 35%. The proposed expansion is expected to become operational by December 2023. We have been continuously investing in the R&D and technology to offer the world-class technology and tires to the customers. We have always been the pioneer to introduce new technological products in the market. Smart Tyre is one of its kind in Indian market and is gaining traction. We have recently launched Puncture Guard Tyre in the passenger car segment. JK Tyre is the first company to launch such an innovative tire in India. We have already developed EV tire and have been supplying to several OEMs. Energy and resource conservation drive is at our core of our value system. We have set out our target to improve our renewable power contribution up to 70% by 2030. We are focusing and working on conservation to greener fuels, that is by replacing coal to biomass. Continuous improvement measures are undertaken in energy efficiency, raw water consumption, and other resource conservation. We are happy to share that with all these efforts, our Chennai tire plant has become the first Indian tire plant in the industry to receive zero liquid discharge plant certification by the British Standard Institution. Our CSR mantra is to empower people, generate social wealth, and stay invested in creation of sustainable values for the society. Corporate governance is an integral part of our values, ethos, and the best business practice followed by the company. We believe that we are one of the most sustainable companies focusing in all aspects of ESG and remain committed to offer advanced and differentiated products in the markets. We have received several coveted awards and accolades in our businesses. Received award to be amongst the India's top 30 most sustainable companies organized by Business World. We have been recognized once again as India's best workplace in the manufacturing for the year 2022 by the Great Place to Work. JK Tyre has been recognized for innovative auto solution at Top Gear Awards 2022 for the Puncture Guard Tyre. Also, the Best Supplier Award by Walmart, Mexico, out of 315 companies and suppliers to JK Tornel. Now I would request Bajoria ji to talk about the performance of JK Tyre and subsidiary companies.
Thank you, Anshuman ji, and a very good morning to all of you once again. With regards to the JK Tyre subsidiaries' performance, both the subsidiaries continue to contribute well in terms of overall revenue and profitability. Cavendish Industries recorded net revenue of rupees 848 crores in Q4 financial year 22 as compared to rupees 791 crores in Q4 financial year 21 and achieved an annual turnover of nearly rupees 3,000 crores in this financial year FY22, the highest ever, including record exports at rupees 307 crores. Operating margins at CIL have been under pressure during 21-22 due to the unabated increase in input costs. JK Tornel Mexico has performed exceedingly well and has achieved 87% revenue growth in financial year 22 from rupees 1135 crores in 2021 to rupees 2120 crores in financial year 22. Once again, highest ever. During this quarter, JK Tornel achieved a turnover of rupees 586 crores as compared to rupees 408 crores, an increase of 44%. Operating profit at rupees 187 crores is an increase of 167% on year-on-year basis. Despite the increased input costs, the profitability margins at JK Tornel has improved by 270 BPS during this financial year due to product price increases as well as other operating parameters. JK Tornel has achieved highest market share in PCR category, which is nearly 12% in the replacement market in Mexico. It is continuing to be in the number one position in online sales and currently operating at over 98% capacity utilization in passenger radial category. Latin America and Brazil export sales has grown multifold. There has been a significant debt reduction in JK Tornel in the last 2 years. Now I would request Mr. Agarwal, the CFO, to brief about the financial performance of the quarter.
Thank you, sir. Thank you very much, and good morning, everyone. Let me take you all now to the key highlights financial performance in Q4 and for the financial year 2022. The consolidated sales were recorded at rupees 3,320 crore as compared to rupees 2,945 crore in the corresponding quarter, registering an increase of 13% on YOY basis. Revenue for the financial year 22 were recorded at more than rupees 12,000 crore, registering a growth of over 31%. The capacity utilization was around 90% during the quarter. Export revenues were recorded at rupees 460 crore vis-a-vis rupees 367 crore in Q4 of financial year last year, 21. An increase of 31% again. In the financial year 22, our exports have grown by approximately 60% over the corresponding period, from rupees 1,176 crore in 21 to 1,873 crore in financial year 22. Profitability at EBITDA level in Q4 FY22 was recorded at rupees 236 crore and rupees 1,107 crore for the financial year as a whole on consolidated basis. As already mentioned, profit margins contracted due to unprecedented rising input costs. However, cash profits for the year stood at rupees 691 crore and profit before tax stood at rupees 309 crore. Finance cost in FY22 has gone down on YOY basis by 10% to rupees 419 crore from 466 crore last year. We are following strict credit discipline and efficient cash management with lower borrowing costs. The leverage ratios of the company are remaining within a comfortable zone level. To be on the growth path, we have already undertaken Tpr expansion project of rupees 236 crore and have now received board approval for expansion of PCR capacities at our Banmore Tyre plant, which will involve a capital outlay of rupees 530 crore. Simultaneously, we have been continuously focusing on the deleveraging. We remain committed to reduce our long-term borrowings significantly.
Wishing to ask a question, may please press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Bharat Bhagnani from Living Root Capital. Please go ahead.
Yeah, hi, good morning. My question was on the working capital. I saw that towards the end of the year, our inventories and receivables increased significantly. So any inputs on that?
I would request Sanjeevji, if you could please.
Yes, sir. So in fact, Mr. Bhagnani, we have been keeping a very tight control on the working capital, but as you would be able to appreciate that during the financial year as a whole, there have been an increase in the input costs. And that input costs have gone up because the raw material prices and other logistics costs and other costs have gone up. So that has led to increase in the working capital requirement. And also, if we compare this financial year with the previous financial year, then there has been a higher capacity utilization in this financial year. So these two factors put together have made it necessary to have a better working capital requirement. But of course, we have been keeping a tight control. And just for comparison's sake, I can tell you that the levels are pre-pandemic, that is in the financial year 2018-19 and 19-20. These were the working capital levels at 70 to 75% utilization, and whereas now we are operating at more than 90%, and also the input costs have gone up significantly, we are operating with the same kind of working capital.
So these inventories, do they include like some pre-purchase of raw materials as well?
So that has impacted that has increased the working capital. So that has the main difference. But as Sanjeev has said, that we are keeping a very tight control. And if you ask me, the cycle per se has come down, though the number may have gone up.
One more reason I could tell you is that our exports actually have gone up significantly from last year of about 1100 crore to 1800 plus crores this year. So, and because as you would appreciate that the export receivables are for a longer period. So that is also one of the reasons why it has gone up. But we are, rest assured, we are keeping a tight control.
Okay, so next question is on the exports. Anshumanji mentioned that we achieved highest ever exports of 1840 crores this year. Now, when you calculate this figure, are we talking about the exports from India, or are we considering the exports from Mexico into USA also for this calculation?
We are calculating this from India exports.
Okay, so Mexico would be separate.
Yes, 1873 crores.
That is from India.
From India, okay. And my final question is on the PCR expansion that you have, approved. Now, what is the sense that what are the funds funds tie up for this 500 odd crores? Do we intend to borrow or do we intend to use? I mean, where is the funding going to be from?
No, so, let me tell you two things. One is that we have already commissioned our last expansion, which we had announced through debottlenecking program, and that has been commissioned successfully. And now we have taken the approval from the board to go ahead because of the very good demand for the PCR tires, to go ahead for the expansion of capacities further. And put together both the capacity increase through the debottlenecking as well as through the capacity expansion which we are going to undertake now will increase our capacities by about 35% from the previous levels. Right. Okay. So now for the funding, we will be tying up for the funding for this project particularly because this has got the approval only yesterday from the board, and we are very sure, and because we have been in touch with our lenders in general, and they are positive that they will be able to provide sufficient amount of the loans for to finance this. But we will be funding this project through a mix of debt and equity. Equity in the sense internal accruals. So that will be funded through both mix of the internal accruals and debt.
So the PCR, I think as per the last presentation, your PCR capacity.
Hello. Sorry, can you be please louder?
In the PCR, your PCR capacity is about 10 million tires per annum, so that will go up by 35%. Is that correct?
More or less, yes.
A good set of results. I wish you all the best. Thank you.
Thank you.
Thank you.
Thank you. The next question is on the line of Noel Vaz from Asian Market Securities. Please go ahead.
Hello, can I be heard?
Yes.
Yes. Thank you for the opportunity. So I just wanted to understand, so this expansion of PCR, this is primarily being taken because our domestic utilization is close to 90%. Is that the view that is being taken? Because a 35% increase seems, a bit on the steeper side. So I was just wondering, how does the company plan to ramp up production? What is the thought around ramping up of the production?
Yes. Our utilization has been around more than 90+%, around in the range of 90 to 95% in the passenger radial, and we are seeing a good demand which is on our way coming. Hence this expansion. But also we are working very hard on the productivity as well to improve, so we can well cater to the demand of the market in the domestic and as well as export.
Actually, my question is more along the lines of... Hello?
By December 23.
Sorry, sir? I didn't get that part.
No, Mr. Kendra is only clarifying that this new expansion which we have announced yesterday and today rather, so this will be made available only after December 2023, right? So the present expansion which we completed through debottlenecking will be made available during this financial year and till the time the new expansion comes up. So, but that will be available and that will be sufficient to take care of our requirements. Although the demand has been growing very, very fast, but that will be sufficient to take care of our requirements for the domestic as well as export markets.
Okay, so just to understand that there is no issue from the marketing or distribution, that there is
absolutely not. So
okay.
Just to give you an idea, there is a big backlog of the export demand which we were not able to cater to before the debottlenecking project came into being.
Okay. Thank you. And that is all from me.
Thank you. The next question is from the line of Jinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi, sir. Congrats on good numbers in tough environment. First question is on the truck and bus tires. So, how has been the growth which we have seen in the replacement market, both for TBB and TBR in fourth quarter?
Well, the growth of TBB and TBR has been good. But from the fourth quarter onwards, we are seeing the OEM CV segment picking up, and we are seeing that the CV segment, which was rather muted in the previous quarter, have now started picking up. And it is also in the aftermarket, we are seeing the core industry of, say, namely cement, steel, other core industries have also picked up. Mining. So the utilization of vehicle has tremendously gone up. So the commercial CV segment is looking to be buoyant this year.
Okay, because in fourth quarter, some of your peers have indicated that replacement demand was relatively weak, both for TBB had declined and TBR also was relatively muted. So did you also see similar trends is what my question was?
I'm sorry, I missed out the first half of the question. There was some disturbance. Could you please repeat that, please?
Yeah. So my question is, given some of your peers have indicated impact in fourth quarter on the replacement demand on TBB and TBR, did we also witness similar trend, or we still grew at a reasonable pace?
No, we had a reasonable good demand, and good OEM also picked up in the fourth quarter. So we had a good demand in the fourth quarter.
Got it. And second question pertains to exports. Exports, we have done a tremendous job growing almost 65% plus in FY22. How do you see the growth panning out in next 2 to 3 years in this business, given that it's a shining area for us and for the broader Indian tire industry? And secondly, within that, would exports be better than our corporate average margins, or it would be more or less in line?
I'll take your first question. I'll take your last question first. Export realization has been good because you're able to pass on the substantial amount of raw material price increase in the market. So the market absorbs that price increase in the international market, particularly export market. Well, our performance has been, we have achieved 60% growth over YOY from rupees 1176 crores to 1873 crores in FY22. And this has been possible through our continuous thrust on providing exponential quality of products and services to our customers. We have also our brand in in truck and passenger radial across the market has continuously increased substantially across the geographies. In order to sustain and continue our growth of our export despite these geopolitical and economic conditions, we intend to continue our effort to leverage our synergy between India and Mexico business, develop technological advanced product, specific products, and create brand image of our products in the international market. And we continue to cater into niche product segments across the categories.
Thanks for that elaborate answer. Last question is on the RM cost pressure. So what kind of RM cost pressures we saw in fourth quarter, and based on the current stock prices, what kind of inflation do you see further in Q4FY23?
So on the RM front, there has been an increase of 3 to 4% in Q4FY22. And we expect that increase during Q1 FY23 would be between 4 to 5%.
Okay, and for that, what kind of price increases have we taken in fourth quarter and in 1Q so far?
Yeah, the company has taken a price hike of 1 to 2% in Q4 FY22, but may take a further price increase of 4 to 5% in Q1 FY23 to moderate the impact of our margins. However, this is all subject to market conditions.
Sure. Thanks and all the best. I'll fall back in queue.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Mitul Shah from Reliance Securities. Please go ahead.
Yeah, good morning, sir. Thank you for taking my question and giving opportunity. Sir, first question is on export contribution. This year, as you stated, has gone up significantly. So, what is a sustainable contribution you expect over next 1 to 2 years, and what is a long-term, like next 4-5 years plan to take this export contribution? And just directionally, export margins are better in this currency depreciation situation, or more or less at par with domestic?
No, as I explained in the previous question, the export market still remains very buoyant, and certain parts of the world still is very buoyant. And the market which we are catering into, there is immense potential of demand there. So we have a firm view that export remains buoyant for this year and the coming years.
Okay, but do you expect it to go further on a higher level, or this is a decent level which we'll be able to sustain?
We as I explained, that there is immense potential in the export markets in different geographies. It is actually the company in terms of capacity, how much can it cater, and we are definitely focusing on the domestic market first and then the export.
The second question, how the market share is trending in the domestic replacement side, segment-wise? Any ballpark number?
We are doing very well, fairly well in the domestic market in terms of all the categories, particularly the CV category and the non-truck bias categories.
Barring the raw material prices actually, which is putting pressure, and this is a very unprecedented kind of an increase in raw material, as Anshumanji has explained earlier. So otherwise, there is a very good demand.
We are able to maintain it.
Yes.
Okay. From the Mexico operation, if you can throw more light in terms of how the situation and what is the outlook there, and within Mexico operation in terms of export, do we export to US, but do any plans to export to any other countries? And for example, this Europe and all those things, we are exporting from India only, or there is a scope for further expansion of Mexico products also?
Well, we are exporting out of Mexico to North America and to Latin America, and quite a bit of countries of Latin America, for example, Colombia, and then we are also exporting out of Mexico to Brazil and Argentina, Venezuela, and Cuba, and all those parts, and very small portion to Europe, but not very major exports from Mexico to Europe. And going forward also, there is immense demand from all these countries, and our export growth is fairly good, and we hope that this will continue.
But any scope for increasing contribution to Europe?
Sorry?
Any scope for Europe point of view, any strong potential possibility?
Well, we are not expecting to grow too much in Europe, but because we have logistical advantages towards the Latin American countries and also to North America, so we are growing that in that part of the world.
And how is the situation, outlook for domestic market in Mexico?
Oh, very good. Our demand is very robust, and our market shares are very, very good, and we are trying to increase our market shares on a year-on-year basis.
Industry growth, sir, if you can give some guidance on what would be the industry growth in Mexico?
Look, normal industry growth, the tire industry growth in Mexico is in the range of 6 to 9%, and why I'm giving this range is it depends on which tire we are talking about, whether it is commercial tires, whether it is passenger, but all this will be covered in that range of say 6 to 9%.
Sir, lastly on Cavendish, if you can give how the products and all those things changing there, and inter-segment Cavendish to JKIL, how those shaping up.
Another line I would like to add in your demand scenario, that in Mexico we are supplying and as our managing director just mentioned in his opening remarks, that we have been awarded the number one supplier out of the 315 suppliers to Walmart. So we have enough scope, and we are the best supplier in the assessment of Walmart. And now coming to CIL, you wanted to know exactly the demand prospects going forward?
Yes, demand prospects, and how is the inter-segment revenue or overall business now? What is there any change over last 1 or 2 years compared to 2 years ago? Earlier we used to take Cavendish products and then we used to market under JKIL. So what is the situation there?
No, we are continuing to manufacture JK Tyre products in Cavendish, and the growth of Cavendish is pretty good. And going forward also, we hope to even surpass that growth. For example, as I mentioned, that this year we have achieved nearly 3,000 crores from 2,500 crores, 2,600 crores, a growth of about 16%. And we would maintain this growth. In fact, we may be surpassing this growth.
So what would be this number, inter-segment number for fourth quarter and full year?
Sir, inter-segment numbers and all, the growth itself should give you an idea that our turnover, which is nearly 3,000 crores, should increase in the coming year by the same, maybe about 20% or more. So inter-segment up chhodiye, because ultimately we are growing on a overall basis, as you would have seen, that from a turnover of about 8,000 plus crores, we have achieved 10,000 crores, the India operations, JK Tyre plus Cavendish put together.
Mitul, I would like to add to what our Bajoria ji has said, that there has been a sales between CIL to JK Tyre, CIL to Tornel, and JK Tyre to Tornel. So there is a lot of, because the requirement of different markets, different companies are catering to, depending upon what is the best possible logistics way, we can save some money or improve our profitability. So this is actually about 250 crore rupees for the quarter. There is an intercompany sales between the companies. And for the year as a whole, I think it would be more than 800 crore rupees.
Exactly.
Yes, sir. Thank you very much, sir. Lastly, just follow up on this Capex of 530 crore we recently announced in board. So it would be roughly on a 2 years basis, as you highlighted that December 23 would be the period to make it operational.
Yes, so the outlay will be spread over 2 years period, although we will be ready with the new capacity by December 23.
So broadly 23 and 24 overall Capex consolidated basis, sir, what would be? Apart from this?
No, so there are the complete Capex over the 2 years period, including the CIL expansion plan for the TBR, which we had already announced. So that will be about 766 crore, and this will be spread over 2 years period.
So roughly around 1,200-1,300 crore Capex over 2 years for this year.
Initially, it would be lower, of course, because once the orders have been placed, we have to pay advances and open letter of credits in favor of suppliers. But later on, the payment will become due as in that they supply the equipment, and let's say 6 months to 8 months before commissioning of the project, the major payments will come. And then, of course, some part of it will be spilling over to the next financial year as well.
Okay. Mexico would be no major Capex.
Not yet, Mr. Mithun. Not yet, because we have completed the expansion already about 2 years ago. So, but we are all continuously weighing the markets, and maybe going forward we may take up further plans in expanding capacities at Mexico.
Thank you very much, sir, and all the best.
Thank you. Thank you very much.
Thank you. The next question is from the line of Shashank Kanodia from ICICI Securities. Please go ahead.
Yes, sir. So just wanted to check what will be a maintenance Capex per year. It's roughly 200 crores, right?
Maintenance Capex, this has been actually in the range of about 100 to 150 crore, depending upon from time to time what is required to be upgraded and damaged. So that is what we have been targeting, about 150 crore.
Okay. But putting upon a grown Capex and maintenance Capex in total, we will be spending something like 1,100 crores over the next 2 years, right?
Sorry, can you repeat the question?
Taking together your growth Capex of 766 crores and 150 crores of maintenance Capex per year, we will be spending something like 1,100 crores over the next 2 years, right?
That's correct.
Okay, understood.
Maintenance Capex is annual, whereas the Capex expansions we have announced is actually for 2 years period in a day. So this is not exactly the figure, but that will get somewhat about 100 crore rupees added to 1,000 crore rupees overall.
Right, sir. Sir, the growth Capex was 766 crores. So what kind of revenue potential does it have?
So this will generate revenues of about 1,000 crore rupees overall.
Okay. So okay, understood. And secondly, sir, in your presentation, you have put in your total capacity at 6 lakh odd tons, right? So if you could break up this is between India standalone, CIL and Mexico?
For which product?
Sir, the total installed capacity for JK Tyre is 6 lakh tons, right? You mentioned in a slide. So if you could break it between India standalone, CIL and Mexico, and what were the utilization levels for fiscal year FY22?
Utilization level you are asking basically.
Plus absolute capacities also.
Capacity utilization is more than 90% across all the companies, whether it is in India or in Mexico. Right?
Can you share individual capacities between India, CIL and Mexico?
India, I can tell you for India, this is about 85% for India, including like JK Tyre has been at around 89% or 90% assumed, and Cavendish is about 80%. And for Tornel again, this is nearly 90%. So overall, that is why I'm saying that this is except for Cavendish, 90% overall. Or maybe 1 or 2 percentage points while we calculated. Exactly, we have not just made it readily available. So we will upload it maybe.
Okay. Secondly, sir, on the operating margins front, so this quarter you're doing 7%, right? Which is, I think, the worst ever in the history of JK Tyres, and you have vastly underperformed the competitors as well. Given there are raw material pressures within the system and you will take some calibrated price hikes, so what is the sustainable level of margins you are looking forward for JK Tyres on the standalone and the consolidated basis for the next 2 years?
So broadly, the margins should come back to the normal levels because the prices for raw materials have gone up significantly. This was also unprecedented, and I am not sure whether this was the kind of raw material price increase ever happened So this margin in the normal scenario should be in the range of about 12% plus. But yes, you're right. This is very, very low kind of a margin, and going forward, hopefully this should improve.
And I would like to only add here that because of the unprecedented raw material price increase, there has been a margin squeeze to the industry. But here at the JK Tyre, where the team is working very hard for leveraging its operations, which is a volume increase. Our strategy to premiumize more and more SKUs in different categories, namely truck and passenger. Then here we are continuously, gradually increasing the selling price as well, and our focus on operational efficiency improvement, and definitely the cost reduction measures is definitely on our card.
So, sir, over the next 2 years, next 2 quarters at least, you'll see some margin recovery, or you feel that this is probably the levels that we will be working upon?
Yeah, we are going to be seeing gradual margin recovery as we go along different quarters.
Okay. And so lastly, what is the gross debt on books for fiscal year FY22 end?
Say that again, please. What is the last?
Gross debt on your books as of fiscal year FY22.
So this is approximately, I will tell you on long-term basis, this total loan is about 3070 crore, and for working capital about 2000 crore. So roughly around 5000 crore rupees of gross debt is there. But this increased amount of the working capital compared to the previous year is only on account of increased operations of the company and input cost increase.
So you mentioned 5,200 crores, right? Gross debt?
5,100 crores.
5,100 crores. So, sir, given the subdued demand, the margin profile that you're working with, and good 1,100 crores of Capex and maybe 900 crores of interest outgo, you see your debt coming down on the absolute basis over the next 2 years? Or that?
And that is whatever we have guided in the past, that is going to happen. And in future, we are going to see a debt reduction, let's say on account of scheduled debt to the extent of about 550 crore in the financial year 23 on long-term debt basis, and then again around 400 crore rupees, and going forward 400 crore rupees. But of course, some amount of debt will get added because of the new expansions. But everything is going to remain within very tight control, and also we are seeing that the leverage ratios will remain under control. And because we are going to see some improvement in margins, as Anshumanji clarified. So I think things are very much under control.
And so one last thing, given the cash debt situation that we are into, are promoters looking for any infusion of equity in the company in the near future?
That we would not like to comment. That we'll see as the situation emerges. We will see this.
Thank you so much, sir. Wish you all the best for the tough times.
Thank you.
Thank you. The next question is on the line of Shubham Agarwal from Equitas India. Please go ahead.
Thank you for the opportunity. Sir, I just wanted to have a bit more clarification on the Capex. So you did mention that the debottlenecking exercise have already been completed, and out of the PCR capacity expansion of 35%, which includes the new capacity, so how much has already been achieved because of this exercise, and what is the potential revenue that we can get out of this in the current year?
So overall, in the case of through debottlenecking, we have increased our capacities by about 17%. Okay. And this is roughly around 15 to 16 lakh tires. So that will be made available during this financial year. and because we are seeing a good demand in the domestic and export markets for the PCR tires, so that will cater to this market.
Okay. And what is the potential revenue for this 17% increase?
Roughly around 500 crore rupees of revenue can be generated through this expanded capacity.
Okay, fair enough. And secondly, on the PBR expansion of 250 odd crore, what is the timeline for commissioning this part?
March 2023.
Okay. And secondly, on the margin side, so earlier in the call you mentioned that last quarter RM increased by 3 to 4%, and this quarter also it has increased by 4 to 5%. But the increase in realization is not taking place at the increase of raw material. But you mentioned that the margin should improve from coming quarter also. So I just wanted a bit more clarification that how the things are going to pan out over the next 1 or 2 quarters.
You see, the price increases are happening as the company strategy. We are taking price increases in different product categories, and our strategy is to take the price and seeing the market condition in terms of absorption of that price. So there is always a lag effect of that price increase, and that translates into the profitability at a lag effect. So just 1 quarter indication is just not good enough.
Okay, understood. And lastly, on the export side, so what are our key export geographies, if you can explain that?
Yeah, we are focusing on many geographies, namely the North America, which includes Mexico, US and Canada. We have a large percentage of our sales going there. Plus in East and Middle East Asia as well. These two are big markets, and plus LATAM, which consists of Peru, Colombia, Brazil and Chile. These are big markets for us.
Okay, understood. Yeah, that's it from my side, and again, best of luck for the coming quarters.
Okay, thank you so much.
Thank you. The next question is on the line of Amit Agarwal from Leeway Infotech Private Limited. Please go ahead.
Good afternoon, sir. My question is regarding the rubber prices. Sir, have they come down from the peak levels, and will they add some margins to the bottom line this quarter?
Yes. The rubber prices in the last couple of days, they are coming down. They are definitely coming down.
So the margins will increase this quarter because you are further taking the price rise of 3 or 4%, plus the rubber prices are coming down, and oil prices are stable right now. Do you think that there can be a margin expansion from this quarter itself, or you have to wait for 1 or more 2 quarters?
You see, apart from natural rubber, there are other derivatives of crude oil raw material, which comprises of the whole basket, including natural rubber. So the whole basket actually is going up in terms of price, cost. So if this raw material, if the crude oil stabilizes, then we will see some reliefs in their derivatives, namely carbon black, synthetic rubber.
From this quarter itself, or we have to wait for another quarter? What do you think? What is your expectation?
So in fact, as we have clarified earlier, there will be the increase on raw material which we are expecting in the range of about 4 to 5%, and equal amount of the increase in prices we are expecting. So hopefully there should be some bit of the gap marginal, which will lead to marginal improvement in the margins. But broadly, because again the raw material prices are continuously increasing. So we'll have to see. Major improvement can come maybe going forward when the raw material prices are stabilized.
And my next question is, sir, I've been following the company for last 6-7 years. So compared to competitors, our margins are always less. What is the reason? Like compared to Apollo or MRF or Balakrishna, what is the reason behind the same?
See, every company follows its own strategy. I would not like to comment on any of the company, but here at JK, we are constantly improving our margin, and the mix is also very different from each company. So here, as I said, that we are concentrating and focusing and leveraging on our premium mix in the TBR and passenger car and the PCR as well.
And my last question is regarding this new product that has been advertised by JK Tyre is puncture-free tire. So how is it different compared to the other tires, and how advanced is the technology compared to the other tires in the market? So will it help in our margin expansion as a whole?
Yes, we have recently launched the puncture guard tire, and this is 15-inch and above. Here, the differential pricing is almost around 15 to 16% compared to a normal tire, and this is gaining good traction. Our numbers are gradually picking up. And yes, indeed, this will definitely help in improving the margins.
Okay, thank you.
Up till now, we are the first in the industry in the four-wheeler.
And sir, my last question is, if you allow me, is there any chance of breaking to the high-end luxury cars like we are supplying to Kia right now? Is there any chance in the future, in 1 or 2 years, that we might target the most luxurious cars available in India? Because I think the technology is very good compared to the other tire manufacturers.
We are definitely working in the luxury space, but our acceptance of higher sizes in the aftermarket, which is the replacement market, is definitely gained traction, and we are very working with OEMs in the higher end variants.
And incidentally, the luxury cars like Audi or BMW or Mercedes are all fitting JK tires as well in the 17-inch and 18-inch range, even today. And as our managing director just said, that continuous work is going on to keep improving that sale to the luxury cars.
So you're talking about the OEM or this is replacement side you're talking about for Mercedes and Audi?
To the OEMs, we are talking about the replacement sales.
Okay. Thank you.
Thank you.
And incidentally, I can tell you that we are supplying OEM tires to the Daimler-Benz for their commercial vehicles.
And sir, because you just said that commercial vehicles are really picking up, so is there any expansion plan on that side, or we have sufficient capacity to match that commercial demand?
No, we have. We have already taken an expansion of Tpr capacity of rupees 236 crores. Which we've already, it is already taking place, and we are going to be, this is going to be completed within March 2023.
Okay. So if the demand of commercial vehicle is very good, so is it difficult to pass on the increasing prices of the tires?
No, so there is a good demand in the market. But we are gradually, as I told you, that we are passing on gradually. We cannot pass on in one shot the full price increase in the market.
Okay, thank you. Thank you from my side. That's it.
Thank you. The next question is on the line of Basudev Banerjee from ICICI Securities. Please go ahead.
Hi, thanks sir for taking questions. Just a couple of queries. One, as you said that 4 to 5% raw material basket increase in Q1, and typically that is the lag effect of the commodity prices, which happens say during Q4, where it will affect your Q1 raw mat basket. So already we are mid of May, so first half of Q1 is over. So how do you see raw mat basket panning out in Q2? Combination of natural rubber and crude derivatives combined.
Though we, as you heard rightly, Q1 we are expecting it to grow by 4 to 5%, and there is so much of uncertainty, and there is no visibility. So we would not like to comment that how much is it going to increase or.
Guesstimate at this stage.
Okay. And sir, the Tpr, what is your total Tpr capacity as of now in ton per day, including Cavendish?
We are at 30. We are at 40 lakhs per annum.
So can you tell that in ton per day?
We'll have to just calculate that per day. We'll come back.
And what's the utilization in overall Tpr as of now?
Utilization levels are
90%, 90+%.
And in the call, sir, as you said, the plans of Tpr expansion, what is the percentage of capacity within Tpr you are increasing?
We are building 10%.
Okay, 10%. And what's the Capex replacement cost, Capex per TPD as of now?
For the TBR?
Yes, sir, yes.
TBR, we have already announced earlier at a rupees 236 crores.
So I was just trying to understand that the typical Capex per TPD, which used to be around 10 crore 3 years back, how much inflation it has seen in terms of Capex for TBR as of now.
So, okay, let me clarify this point. I do not know exactly per ton, but if you recall, in 2018 we had announced a project for about 590 crore for expansion of TBR capacities in cementitious industries, and which was later on deferred because of the market conditions, because of pandemic, and because of several legislative changes in terms of taxable norms, insurance, and all those things. Right, but by that time we had already incurred about 175 crore rupees for the long lead items purchases and imports. So that together you should look at the 236 crore along with 175 crore rupees which we have already incurred. So put together 411 crore rupees or 10 crore rupees. That will be the total amount of the capex which will be incurring to increase the capacities of the TBR by about 10%.
Sure, understood. And last question, sir, out of your India operations, what percentage of revenue is coming from PCR?
From the TBR, 50.
PCR.
Sorry, PCR you're saying. Okay.
Yeah.
Just let me see. Okay.
21% approximately.
31.
21.
Okay. Basically, I was trying to understand that PCR being a better margin segment where PCR replacement pricing power should be much superior. So as somebody also asked that we are at 7% margin. So from a portfolio perspective, if I try to see PCR being 20% and overall margin being 7%, so the implied truck tire margin must be much lower, which implies replacement market pricing power in truck segment must be very low as of now. So from that angle, I was trying to.
Just one point I would like to get clarified on. You were asking about the margins, or you were asking about the revenue contribution?
No, sir. I'm saying PCR margins must be superior to truck margin. So 1/5 of the business is coming from PCR. So just trying to understand the overall pricing power for the industry in the truck replacement.
Okay. Thank you.
Sure, sir. Sure. Thanks. All the best, sir.
Thank you.
Thank you. The next question is on the line of Amit Agarwal from Leeway Infotech Private Limited. Please go.
Sir, one more question. I just wanted to know which is supposed to be the best quarter for tires out of the four quarters, volume-wise.
The first quarter, because of the summer months, has been historically very buoyant, considered to be good.
Which is the worst? The March one or the...
When the rains start, July, second quarter.
Second quarter is not as seasonal a business as you would be thinking. This is just some amount of the improvement in volumes that happen in the summer months and decline in the rainy season. This is not a seasonal business as such.
Okay, thank you.
It starts in May, some will start in July. So I think, it's not that kind of a seasonal industry as Sanjeev has mentioned.
More or less last year we
are up and down significantly.
Marginally up and down.
Okay, thank you.
Thank you. The next question is on the line of Mitul Shah from Reliance Securities. Please go ahead.
Yes, sir, thank you for follow-up opportunity. Sir, clarification on Capex side. Sir, would that be around 1,100-1,200 crore over 2 years, or it would be 1,500 crore plus? Because if I am adding roughly 770 crore for growth Capex, 530 crore recently announced Capex, and around 300 maintenance Capex, so that number comes to be close to more than 1,500 crore. Whereas in previous question you highlighted 1,100 crore.
Let me clarify it. The debottlenecking program which we had announced earlier, that has already been commissioned and completed, right? And now the projects in hand are, and which are already going on. One is the Tpr capacity increase for 236 crore and the PCR capacity increase for 530 crore. So these are the expansion plans, and apart from this, the maintenance capex of about 125 to 150 on an annual basis. That's it. So 300 crore rupees you can add for 2 years period for maintenance.
Okay. So around 1,100-1,200 will be appropriate number.
Yeah, whatever is it? 1,100. Yeah. Nearly 1,100.
Right. And sir, lastly on the EV tire side, any sizable presence we are able to make it, or we still enter to the EV segment?
Yeah, we are in very much advanced talks with the OEMs, but we have already put EV tires in the bus application in the country, and also even in 2-3-wheeler we are present in the EV variants in India.
Sir, any client addition on the overseas business? In India, we added Kia recently, you highlighted. Any major client addition outside India operation?
In the four-wheeler market, that is commercial, as well as in the passenger vehicle, in Mexico, we have added Scania, SCANIA, the bus manufacturer, and we are also supplying some tires to this another bodybuilder in Mexico. I'm forgetting the name. So these are the additions, but otherwise, you see, we are supplying to Mahindras from Mexico for their tractors. We are giving them the rear tractor tire and the front tractor tires. where they are exporting, they are building in Mexico, and they are exporting all over, mainly to USA.
Yes, sir. Thank you, sir.
Thank you.
Thank you.
Ma'am, I think we can now take a stop because it's now more than an hour and 15 minutes, if you don't mind.
Sure, sir. That was the last question. Would you like to add any closing remarks?
Yes, thank you. So I once again thank you all for joining us today for the Q4 earnings call. And we hope that we have been able to reply to your questions to your satisfaction. If there is anything further you would like to understand or ask, we can set up separate meetings and go. Thank you very much.
Thank you.
Thank you. Ladies and gentlemen, on behalf of ICICI Securities Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.